Hi, I'm Satyam. Today, we witnessed a remarkable performance in the Indian stock markets, as both benchmark indices Sensex and Nifty soared to fresh record highs, each posting gains of over 1.5%. This rally mirrors global market trends, driven by renewed optimism after key economic data and the anticipation of favorable policy decisions worldwide. The BSE Sensex crossed the significant 83,000 mark for the first time in history, touching 83,020 points during trade before closing slightly lower at 82,962.71, up by 1.77%. Meanwhile, the Nifty 50 also achieved new heights, reaching 25,433 points at its peak and ending the day 1.89% higher at 25,388.9, edging closer to the 25,500 milestone. These gains underscore the growing strength and confidence in the Indian markets, which have now gained approximately 17% this year. This performance places Indian markets among the best performing globally, supported by a strong macroeconomic outlook, policy continuity, and a robust liquidity surplus. Several factors have contributed to today's rally, with the banking and IT sectors playing a leading role. Both sectors have been pivotal in driving the frontline indices to these new record highs. Additionally, the auto sector provided strong support, further propelling the markets upward. Banking stocks surged on expectations of increased foreign inflows into domestic equities, following the release of U.S. inflation data. This data bolstered the likelihood of a 25 basis point rate cut by the U.S. Federal Reserve, a move that could stimulate liquidity inflows into emerging markets like India. Such inflows are critical in sustaining the momentum in our markets, especially as global investors seek opportunities in high-growth economies. Notably, commodity stocks also performed exceptionally well today. This surge is largely driven by expectations that China, the world's largest consumer of commodities, is likely to reduce interest rates on mortgages. Such a move would boost domestic consumption in China, particularly in the housing sector, which would, in turn, fuel demand for commodities globally. Additionally, the prospect of multiple rate cuts by other major economies, such as the U.S. and the European Union, adds to the optimism surrounding the commodity markets. Should these rate cuts materialize, we can expect an even greater rally in global commodities, which would further benefit markets like India that are closely tied to these trends. All 14 major sectors in the Indian markets logged gains today, marking a broad-based rally. The metals sector led the charge, while the energy and auto sectors each posted gains of approximately 2%. The metal sector's strength can be attributed to global developments, including expectations of increased demand from China and the impact of potential monetary easing in major economies. Energy stocks also benefited from this sentiment, as investors anticipate higher consumption levels and an uptick in demand as global economies work towards stabilizing growth. The rally in the auto sector comes at a time when the industry is showing signs of recovery, buoyed by strong domestic demand and supportive government policies. This sector has been particularly resilient in recent months, and today's performance reaffirms its critical role in driving India's economic growth. Meanwhile, attention is now turning towards India's consumer inflation data for August, which is due later today. This data will be closely watched by both domestic and global investors, as it will provide critical insights into the health of the Indian economy. A lower-than-expected inflation reading could further strengthen market sentiment, as it would provide room for the Reserve Bank of India, RBI, to maintain or potentially ease its monetary policy. On the other hand, a higher reading could prompt a more cautious approach from the central bank, potentially moderating some of the optimism in the markets. In the global context, the possibility of China cutting mortgage rates adds another layer of complexity and opportunity. China's economy plays a pivotal role in global trade, and any policy measures aimed at boosting consumption, especially in the housing market, would have significant ripple effects across the world. With China being the largest consumer of commodities, a rate cut would likely spur demand for raw materials, driving up prices and benefiting commodity exporting countries. Coupled with the expected rate cuts from other major economies like the US and the European Union, this creates a favorable environment for global equities and commodities. As we move forward, the markets will continue to react to these global developments. Investors will be keenly watching for updates on the Federal Reserve's upcoming interest rate decision. A more dovish stance from the Fed could lead to increased liquidity inflows into emerging markets like India, further supporting the rally in domestic equities. In conclusion, today's market performance highlights the resilience and strength of Indian markets in the face of global uncertainty. The record highs achieved by the Sensex and Nifty are a testament to the robust macroeconomic outlook, policy stability, and favorable liquidity conditions that have been driving investor confidence. While global factors, such as the U.S. inflation data and China's potential policy changes, will continue to influence market sentiment, India's strong domestic fundamentals provide a solid foundation for continued growth. This video is made for educational purposes only. Please don't make any investment decisions based on it. If you like the video, please like, share, and subscribe. Thank you.